RSI Relative Strength Index is a popular technical indicator used by traders to identify potential buying and selling opportunities in the market. The RSI indicator measures the strength of price action by comparing the average gain and loss over a specified period. Here is an intraday trading strategy using the RSI indicator for NSE. Set up your chart. To use the RSI indicator, you need to set up your chart with the RSI indicator. Choose the time frame that you want to trade, and add the RSI indicator to your chart. The most commonly used period for the RSI indicator is 14. Identify the trend. Before placing any trades, it's important to identify the overall trend of the market. You can use other technical indicators or price action analysis to determine the trend. Use RSI to identify overbought and oversold conditions. When the RSI is above 70, it indicates that the market is overbought, and when the RSI is below 30, it indicates that the market is oversold. Place a buy order. When the RSI crosses below 30 and starts moving up, it indicates that the stock is oversold, and it's a good time to buy. Place a buy order when the RSI crosses back above 30. Place a sell order. When the RSI crosses above 70 and starts moving down, it indicates that the stock is overbought, and it's a good time to sell. Place a sell order when the RSI crosses back below 70. Use stop loss. Always use a stop loss to limit your losses in case the trade goes against you. You can use the previous swing low for buy trades and previous swing high for sell trades as a stop loss. Exit the trade. Once the RSI reaches the opposite extreme level, 70 for buy trades and 30 for sell trades, it's time to exit the trade and take your profits. It's important to note that no trading strategy is foolproof, and you should always do your own research and analysis before placing any trades. Additionally, it's recommended to backtest the strategy on historical data to see its performance before using it in real-time trading.